Our next question in question 3 is to do a budgeted financial report. So we've got all this info and we've done our account reconstruction. Why do we need to do that? We need to do that because we need to make some reports. And in this case, we've been given all this info. So we've been through this in the previous questions. And this additional info here too. And why we did those account reconstructions is because now in the real world, the important thing that you publish for the public to see is the cash flow statement. We also do an income statement and a balance sheet, but this one says, prepare the budgeted cash flow statement for the year ended 2023. So we've got 3 sections: operating, day-to-day trading activities, investing, which is the buying and selling of non-current assets, and we've got financing. So there's only 4 things that go in there. So this is not really a new topic. We've done cash flow statements in Unit 3. We're going to get more marks for it now. All we're doing is a cash flow statement for the future. So that's a budgeted one. But the knowledge is essentially the same. The problem here is you've got so much information to go through. So you just go through it one bit at a time, and then the headings are there, so you can just plonk it in as we go. You don't need to do the cash inflows first and the cash outflows. If you look at the textbook, most of the answers like that. You don't need to do that. You can do it in whatever order you want. And businesses in the real world do that too. And it actually makes it way easier for you. So let's go. I'll show you how. So the first thing is total sales will be 250, but this is a cash flow statement, so I only want cash sales. So I guess if this is the first bit of info I've got, later on it must tell me something about that. It says 70% of the firms will be on a cash basis. And also this note here says GST is to be applied where applicable. So I guess I'm going to get 70% of 250, that is 175,000, and then I'll add in 10% here about the GST as GST collected or GST received. So I've done my first bit. So I've gone through the info from top to bottom. I found total sales, done. The next bit is, well, I make cash sales, but it also said I make credit sales. Now, credit sales wouldn't appear in here, but what would appear in here is the money or the cash that I get from accounts receivable. And if we just go back, actually, that is not listed here anywhere. But we did do that in an earlier question. That was the point of doing these account reconstructions. We had to figure out X here. And X was the estimated cash received from accounts receivable. So we got 76,485, so I'm going to write that there. Receipts from accounts receivable. What's important to note is that you might have got this wrong earlier. You might have got a different number, and that's not ideal, but you still could have got marks if you did some workings out here. What's important now is whatever figure you got, so let's say you got 80,000 there, you now write that there, and you get what's called a carry forward or consequential mark. So you're not going to be penalized twice. So you write in what you got here for X. All right, let's look at our additional info. Just go from the top. Says payments to accounts payable were 55. That is an operating activity. And the outflows we put in brackets. If you put a dash for a negative, that's okay too. But indicate to the reader that it is an outflow or a negative. Advertising expense paid 34. So that's a little tricky. Just because it said here the relevant account balances, last period I prepaid some advertising. So that was paid last period, so I can actually ignore that. But I guess what I can't ignore is that if I pay 34,000 for advertising and 1,500 for the future, well, that must mean the difference between the two, which is 32,500. That's the advertising expense I paid for 2023, and the other 1,500, this bit here, is prepaid for the next period. Now, together, these two numbers add to 34,000. So what I did is I said advertising paid was 34. But 15 is for the future, so I called that prepaid. Well, that meant the rest was just an advertising expense this period. Now, that is very complicated. Looking at past exams, is this actually acceptable to do this and just write advertising, 34,000? And that's totally acceptable too. The only reason why I might do it this way is just because I might need these numbers later on. But look, it really doesn't matter. If you find it easier to do it this way or just to plonk it in and go, it says here, advertising paid 34, put it in. It's probably much easier right now. It just might make it a little harder for you later on. But let's stick with that one because it's much easier to read. All right, next one. Wages paid here, 45,000. But again, there was something about that in the relevant account balances. It said accrued wages were 1,000. And then there was 1,800 at the end. So what we actually did in the previous question, we had to reconstruct the wages ledger. What was the point of that? Well, it was actually so we could answer this question. So what we did, we actually had to do this ledger on the top. We didn't need to do this ledger here on the bottom called accrued wages. We just did it because it helped us sort of do the wages ledger. So the opening balance was 1,000, so that would be a credit. And the reason why is accrued wages are a liability, and liabilities have a credit balance. So at the start of 2023, I have a credit balance of wages that I owe from the period before. And then the question said I'm going to pay $45,000. So I guess the first $1,000 must be to pay off the workers from last period. So I'm paying $1,000 in accrued wages. And that must mean if I'm paying $45,000 for wages, the other $44,000 must be for wages for this period. So really, the $45,000 that we paid was for two things. It was for wages this period, and it was for accrued wages last period. Now, again, if you find it easier for now, you can just whack in wages 45, which is obviously much easier. The only reason why we wouldn't is maybe we do need these numbers later on. Maybe we don't. But it's up to you. If you find this way easier, just stick with that. Okay, we're up to the next thing. Drawings, $50,000. However, $9,000 was inventory. Now this is a cash flow statement, so we're only dealing with cash. So that must mean the drawings of cash was only $41,000, and that is a financing activity here. Cash purchases of inventory, 20 grand plus GST. So when I buy inventory, that's an operating activity. So I'm going to put this one here. With the GST, I always leave GST paid until the end, and I'll explain why. So I'm not going to put that in it. I think it's much easier if you leave it till the end. Next thing, cartage inwards paid $4,000. I'm going to leave the GST again, but cartage inwards is an operating activity, so this will go here. Cleaning expenses, $11,000. That's an operating activity. Depreciation expense, that is an expense, but it's not a cash flow. So it's important you know the difference. So that is actually a trick question. We're not going to need that for this question because this is a cash flow statement, so I'm going to ignore it. Loan repayments, tricky one. It says the loan repayments are $16,000 plus $2,000 in interest. So there's really $18,000 here. What's important to realize is it's two separate things. $16,000 is for loan repayments. Now that is a financing activity. So I'm going to put that here. The $2,000 in interest though does not go in the financing section. It actually goes up here as an operating activity. So that can be quite difficult to understand. Purchase returns to supplier, $2,000. Now in the real world, if you return something, you might get your cash back. But in our course, we just say all returns are for credit. And this is a cash flow statement. So a purchase return or a sales return would not go in here. We're going to ignore that. We're going to buy some laptops for $3,000 plus GST. I'm going to leave the GST, but laptops would be a non-current asset, so that would go in the investing activities section here. Inventory loss is expected to be 2% of total sales, but that's not a cash outflow. That's just losing inventory, so we're not going to need that here. Bad debt declared will be $1,540 including GST. So this is not cash. This is actually the opposite of cash. This is saying someone's not going to pay me cash. So for our cash flow statement, we can ignore that. And likewise, same with a discount expense. A discount expense is something I give to someone so they don't have to give me cash. So that would not go in here either, just like discount revenues wouldn't. So that just leaves this one, and we've also got to do the GST paid. But this one here is quite tricky. It says the existing loan will be increased during the year with an additional loan from ABC Bank. Very confusing. All right, let's have a look. So we got this loan from the bank, and at the beginning of the year, we expect it, or it is actually $30,000. But then at the end of the year, we expect it to be $40,000. But that doesn't really make sense because when you think about it, we're expecting to repay $16,000. Here, we said loan repayment $16,000. So if I owe $30,000 at the start and I repay $16,000, that'll leave a balance of $14,000. But yet, the balance at the end is $40,000. So what this question's saying, in a tricky little way, which it has been on the exam, it says we're going to top up the loan with an additional loan. So what does that mean? It means I'm going to borrow a certain amount. I don't know what that amount is, but what I know is if I owe $14,000 and the balance at the end is $40,000, well, the amount I'm going to borrow is the difference here. So if it's $40,000 at the end and I already owe 14, I'm going to borrow 26,000. So 14,000 plus 26,000 is 40. In other words, right here, that's a financing activity. I'm going to say loan from ABC Bank, 26,000. So I'm done, except for GST paid, and I leave it till the end, and here's why. Just because usually it's not given to you in one big figure. So we need to go and calculate it for many items, and we could do that one item at a time and keep a little running balance on the margin of the paper or something. I find that very confusing. So all I do is when I'm done, all I'm going to do now is just go through here and just find. So I'm just looking for payments, so only things in brackets, and I'm just looking for the ones that would have GST. So we just go from the top. We've got payments to accounts payable do not have GST, otherwise we'd be double dipping because we've already recorded it at the time of the credit purchase. But advertising is a payment that has GST, so that's 34,000. Wages do not have GST, but cash purchases of inventory in our course, we don't sell anything that doesn't have GST in our course, so we'll say inventory is a payment that has GST. Same with cartage inwards. Same with the cleaning. Sorry, I did laptops. There's a little typo there, but we'll get the cleaning. There it is there. The interest expense does not. You don't get taxed on interest, not in our course with GST. But then this one, people forget this one just because it's in the investing activity section, but the purchase of a non-current asset will have GST. What doesn't have GST is drawings or loan repayments. So if we're just going through the payments, so the negatives in brackets, that's everything that has GST, and if I add all that up, that comes to 72,000. So there's payments of $72,000, and they all have GST on them. So if I get GST 10%, 72,000, that is 7,200, and that is the number I'm going to write there. So my GST paid will be 7,200. So my advice would be to always leave that figure till last, and then just add up all the things that have GST on them in terms of payments, get one total, times that total by 10. Instead of doing it going advertising times 10%, it's 3,400 plus 10% of this plus 10. Like, that's very hard to keep track of. So I think you just add them all up, get one total, and then times that by 10%. And we've done everything except for we just got to total them up. So each section. So remember, you don't need to put the inflows and outflows in that order. You can put them in whatever order you want. So look at this one. We got the outflows before the inflows. That's fine. Makes no difference. So all we got to do now is add up each section. So if we add up all these numbers in the operating section, we get 90,785. The investing section, I know there's only one item, but we still do need to put a total. So we're going to put that there. Financing activities, we're going to add up these three numbers, and we're going to get an outflow of 31,000. And then to get the net increase or decrease in cash, we just add up these three numbers. 90,785, negative 3,000, negative 31,000. That will be an overall inflow or increase of cash of 56,785. Last thing I need is the balance at the beginning and therefore the balance at the end. Where will that be? Well, it has to be given to us somewhere. And in this case, it's actually the very first item that we're given. It says cash at bank is actually $29,000 at the beginning of the year and then not provided at the end. They don't know. That's what we're being asked to figure out. So the 29,000 will go there. And that must mean if I've got 29,000 at the start and I'm expecting it to go up by 56,785, the balance at the end will be 85,785. And now we're done. In terms of marks, I awarded the marks like this. I did 1 mark for the cash sales with their GST, 1 mark for the receipts from accounts receivable and the payments to accounts payable. And remember, this receipts from accounts receivable was a carry forward mark from earlier. I did 1 mark for advertising, 34,000. Just remember, if you did want to split it into advertising 32,500 and then prepaid 1,500, that's okay too. But 1 mark for that. 1 mark for the wages, 45, which again, if you did want to split it into wages expense 44 and accrued wages 1,000, that'd be okay too. Now, the next 4 numbers, I only gave 1 mark. Bit harsh, to be honest. The interest on its own could probably be a mark. But the reason why I only gave 1 mark for these 3 was because they were given to you directly. So I think it's pretty reasonable for them not to be 1 mark each and for them all together to be 1 mark. Perhaps the interest could have been, 1 mark on its own. Definitely gave 1 mark for GST pay. That required quite a bit of work. 1 mark and now we go to the investing section for the laptops, but not just the laptops, putting them in the right section. And also making sure you didn't put the GST on the laptops here, that just goes up there. In our financing section, 1 mark for the drawings and the loan repayments. Again, a bit harsh, could probably maybe even be 1 mark for each. And then 1 mark for this, we had to do a little calculation to get that. And that just left 1 mark for all the totals and the subtotals. And that's how we got to our 10 marks. So that just leaves one more report to do, and that is our income statement. So this was to do with cash. The next one's to do with revenues earned and expenses incurred.